The hourly overhead rate is calculated by dividing the monthly overhead expenses by the total number of working hours in that month. For example, with $3,000 overhead and 130 working hours, the hourly overhead rate would be $3,000 divided by 130 hours, which equals $23.8 per hour. When bidding on fixed price contracts, you can incorporate the hourly overhead rate into your bid. For example, if you estimate the project will take 100 hours to complete, you would multiply the hourly overhead rate by 100 hours to calculate the overhead cost for the bid. This would be $23.8 per hour multiplied by 100 hours, which equals $23.08. Alternatively, you could apply the hourly overhead rate to the hourly labor rate of your employees to calculate the total overhead cost for the project. Some businesses prefer to bid overhead as a percentage. This can be useful when the overhead costs vary depending on the project or circumstances. To determine the overhead percentage, you would divide the total monthly overhead expenses by the total revenue generated during that month. For example, overhead percentage equals $3,000 overhead divided by $15,000 revenue, which equals 20%. In this case, you would add 20% to the cost of your materials, labor, and other direct expenses to account for overhead. To estimate the overhead cost for bid work, you should consider factors such as travel time, special equipment or materials, subcontractor costs, and administrative expenses. You can then allocate a portion of your monthly overhead expenses to specific bid items based on these factors. Good record keeping is essential for monitoring overhead expenses and ensuring you are bidding accurately. You should track your actual overhead expenses each month and compare them to your budgeted estimates. This will allow you to adjust your hourly rate or overhead percentage as needed. The method you choose for bidding overhead depends on your business model and the nature of the projects you bid on. However, it is important to have a clear understanding of your overhead costs and to incorporate them accurately into your bids to ensure profitability. To dive deeper, let's explore the intricacies of calculating and applying overhead in bidding, ensuring your business remains competitive and profitable. First, we'll clarify the concept of overhead. Overhead encompasses all indirect costs required to run your business but not directly attributable to a specific project. These include rent, utilities, insurance, administrative salaries, and depreciation of equipment. Accurately allocating these costs to your bids is crucial for sustainable pricing. The first approach to consider is the hourly overhead rate. This method is straightforward. You calculate it by dividing your total monthly overhead expenses by the total productive hours worked by your employees in that month. Productive hours exclude vacation time, sick leave, and unproductive meetings. For example, if your monthly overhead is $5,000 and your employees work a combined 200 hours, your hourly overhead rate is $25. To incorporate this into a bid, estimate the number of labor hours required for the project and multiply it by your hourly overhead rate. This gives you the overhead cost to add to your direct costs, such as materials and labor. The hourly overhead rate is best suited for businesses with relatively stable overhead costs and consistent labor hours from month to month. The second approach is the overhead percentage. This method involves calculating overhead as a percentage of your total revenue. To determine this percentage, divide your total monthly overhead expenses by your total monthly revenue. For instance, if your overhead is $5,000 and your revenue is $25,000, your overhead percentage is 20%. When bidding, add this percentage to the total direct costs of the project. This method is particularly useful for businesses with fluctuating overhead costs or revenue. For example, if you're a construction company, you might experience higher overhead during peak seasons due to increased administrative work and equipment maintenance. Using a percentage allows you to adjust for these fluctuations automatically. The third approach is activity-based costing, or ABC. ABC is a more granular approach that allocates overhead costs based on the specific activities that drive those costs. For example, instead of allocating all administrative costs evenly across all projects, you might allocate them based on the number of invoices processed or the number of change orders managed. This method requires a detailed understanding of your business processes and cost drivers. While more complex to implement, ABC can provide a more accurate picture of your overhead costs and help you identify areas for improvement. To estimate overhead for bid work effectively, consider the following steps. Firstly, identify all relevant overhead costs. Make a comprehensive list of all indirect costs associated with running your business. This should include both fixed costs, such as rent and insurance, and variable costs, such as utilities and office supplies. Secondly, allocate overhead costs to projects. Decide how you will allocate these costs to your bids. Will you use an hourly rate, a percentage, or activity-based costing? Thirdly, consider project-specific factors. Take into account any factors that might affect your overhead costs for a particular project. For example, if the project requires specialized equipment or extensive travel, factor these costs into your overhead estimate. Fourthly, monitor and adjust your overhead allocation. Track your actual overhead costs and compare them to your estimates. If you notice significant discrepancies, adjust your allocation method or your overhead rates accordingly. To ensure accurate bidding, it's essential to implement robust record-keeping practices. Firstly, maintain detailed financial records. Keep track of all income and expenses, including both direct and indirect costs. Secondly, track labor hours accurately. Use a time tracking system to monitor the number of hours worked by your employees on each project. Thirdly, document all project-related expenses. Keep records of all materials purchased, subcontractors hired, and other expenses incurred for each project. Fourthly, regularly review your overhead costs. Analyze your overhead expenses on a monthly or quarterly basis to identify trends and potential areas for cost reduction. Here's how to integrate overhead into your bidding process. 1. Calculate your direct costs. Estimate the cost of all materials, labor, and subcontractors required for the project. 2. Allocate overhead costs. Use your chosen method to allocate overhead costs to the project. 3. Add a profit margin. Determine your desired profit margin and add it to the total cost of the project, including direct costs and overhead. 4. Review and adjust your bid. Before submitting your bid, carefully review all cost estimates and calculations to ensure accuracy and completeness. Also, consider the competitive landscape. Research the pricing of similar projects in your area to ensure your bid is competitive. A few common mistakes to avoid when calculating overhead include 1. Underestimating overhead costs. It's crucial to include all relevant indirect costs in your overhead calculation, even those that may seem small or insignificant. Underestimating overhead can lead to underbidding and reduced profitability. 2. Using outdated overhead rates. Overhead costs can change over time due to fluctuations in rent, utilities, insurance, and other expenses. Be sure to update your overhead rates regularly to reflect these changes. 3. Failing to track actual overhead costs. Without accurate tracking of actual overhead costs, it's difficult to monitor the effectiveness of your overhead allocation method and identify areas for improvement. 4. Ignoring project-specific factors. Failing to consider factors that might affect your overhead costs for a particular project can lead to inaccurate bidding and reduced profitability. In conclusion, accurately calculating and allocating overhead is essential for successful bidding and ensuring the profitability of your business. By understanding the different methods available and implementing robust record-keeping practices, you can confidently bid on projects and achieve your financial goals. Remember, overhead is not just a number, it's a critical component of your business's financial health. By mastering its calculation and integration into your bidding process, you're setting the stage for long-term success. Let's consider some specific scenarios. Firstly, let's examine a small contracting business. Imagine a one-person operation focusing on residential repairs. Overhead might seem minimal, but it's still crucial. The contractor's truck, insurance, office space at home, and software subscriptions all contribute. They meticulously track all expenses and billable hours. They've determined their monthly overhead is $1,000, and they typically work 80 hours a month. Their hourly overhead rate is $12.50. When bidding on a small repair job estimated to take 4 hours, they add $50 for overhead. This ensures they cover their indirect costs and maintain profitability. Secondly, consider a medium-sized construction company. This company handles larger projects and employs several workers. Their overhead costs are significantly higher, including rent for office and storage space, salaries for administrative staff, and vehicle maintenance. They've adopted activity-based costing to allocate overhead more accurately. They track the time spent on project management, accounting, and marketing. They allocate these costs based on the size and complexity of each project. This approach allows them to bid more competitively on different types of projects. Thirdly, let's analyze a large manufacturing firm. This firm produces complex products and has a vast array of overhead costs, including factory rent, utilities, research and development, and quality control. They employ a sophisticated accounting system to track and allocate these costs. They use a combination of methods, including percentage-based allocation and activity-based costing. They also conduct regular audits to ensure accuracy and identify opportunities for cost reduction. To further refine your overhead allocation, consider these advanced techniques. 1. Regression analysis. This statistical technique can help you identify the key drivers of your overhead costs. By analyzing historical data, you can determine which factors have the most significant impact on your overhead expenses. This can help you focus your efforts on managing those factors. 2. Cost volume profit analysis. This technique helps you understand the relationship between your costs, volume of production, and profit. By analyzing these factors, you can determine the optimal level of production to maximize your profit. This can also help you make informed decisions about pricing and overhead allocation. 3. Sensitivity analysis. This technique involves testing the sensitivity of your profit to changes in your overhead costs. By analyzing different scenarios, you can identify the potential impact of unexpected cost increases. This can help you develop contingency plans to mitigate these risks. To effectively monitor your overhead expenses, consider these key performance indicators, or KPIs. Firstly, overhead ratio. This ratio measures your overhead expenses as a percentage of your revenue. A lower ratio indicates that you're managing your overhead costs effectively. Secondly, administrative cost per employee. This KPI measures the cost of your administrative staff per employee. A low cost indicates that you're running your administrative operations efficiently. Thirdly, utility cost per square foot. This KPI measures the cost of your utilities per square foot of office or factory space. A low cost indicates that you're managing your energy consumption effectively. Fourthly, insurance cost per insured asset. This KPI measures the cost of your insurance premiums per insured asset. A low cost indicates that you're getting competitive insurance rates. By tracking these KPI regularly, you can identify trends and potential areas for cost reduction. You can also benchmark your performance against industry averages to identify areas where you can improve. Regular evaluation of your bidding process is key. 1. Conduct post-project reviews. After each project, review your actual costs and compare them to your estimates. This will help you identify areas where you can improve your estimating accuracy. 2. Analyze your win rate. Track the percentage of bids that you win. A low win rate may indicate that your bids are too high. 3. Solicit feedback from clients. Ask your clients for feedback on your pricing and service. This can help you identify areas where you can improve your competitiveness. 4. Stay informed about industry trends. Keep up to date with the latest trends in your industry, including changes in material costs, labor rates, and overhead expenses. This will help you make informed decisions about pricing and overhead allocation. In summary, mastering overhead calculation and allocation is essential for successful bidding and ensuring the profitability of your business. By understanding the different methods available, implementing robust record-keeping practices, and continuously monitoring your performance, you can confidently bid on projects and achieve your financial goals. And by embracing a mindset of continuous improvement, you can stay ahead of the competition and build a sustainable, thriving business.